Hi there, this is Matt Krupski with your weekly options beat here on Wednesday, February the 22nd. This week, we're going to take a look at natural gas options. The March natural gas options come off tomorrow on Thursday, so sorry for the short notice here, but I thought yesterday's move merited a look at what's going on here. As we pull up the graph here of the open interest for March natural gas options, just to run through your x-axis there, we have your strike price. Your y-axis, we have total volume for open interest. To remind you, we have the blue lines are the total number of puts per that strike. The orange lines, total number of calls. Now, also on this graph, we'll see the green line there representing where the market closed on Friday at 283. Yesterday, obviously, big day in natural gas, moved down to 256. One of the reasons we're talking about natural gas today is because of yesterday's move. If you look at the graph here, you'll see that at that 275 line, there's over 30,000 open interest in the puts there. So, we come back from the long weekend. We had a warm weekend that's putting a little pressure on nat gas. And then all of a sudden, these 275 puts come into play. To illustrate why it's important we're looking at these open interest profiles as we get to expiration. Now, the way that I remember it is I think about extremes. And if you think about an option that's, say, 2 ticks out of the money with 5 seconds to go till expiration, its delta is going to be close to zero. The chance of it finishing in the money close to zero. All of a sudden, if we that ticks in the money, it goes from a 0 delta to a 100 delta, basically at the snap of your fingers. So as you get closer to expiration, the deltas on these options can change very quickly. Now, as that happens, as your deltas are changing quickly, you're forced to hedge it in some way, shape, or form. So let's think about these 275 puts. If you're long the 275 puts coming into yesterday, probably thinking they're out of play. The chances of them going in the money, not that great. You're not concerned about them in any respect meaningfully. You figured their value was probably sucked out to very little. Then as we get pushed lower yesterday, all of a sudden these 275 puts start to be worth something because the chances of us going below 275 become greater. Now, if you're long the puts and you own something and it's increasing in value, you're thinking, great, I'm not going to worry about it. I'm just going to hopefully that'll pay off for me. I'd already basically written that off. If you short the puts and they start to go in the money, well, now you're starting to worry a little bit because if you short the puts, you're essentially long the market. So as we start to push lower and you short these puts, you have to do something to hedge yourself because the further lower we go, the more they come into play, the greater their deltas become. Basically, the longer you become delta-wise, resulting in greater losses for every downtick. So in order to hedge that, you start selling futures. As you do that in the market, what does that do? That just piles on. So if you're short the puts, you're selling futures to hedge it. That basically piles on, adds to the down move we saw yesterday and increases that move. So that's one of the reasons I thought, we should look at it and explain why it's important to look at open interest profiles as we get close to expiration. Now, we moved all the way down, like I said, from 283 on Friday down to mid to high 250s, 255 yesterday. Expiration coming up tomorrow. You'd have thought maybe we'll see some sort of bounce back today. As of right now, we're back in the 260 area, maybe up 4 or 5 cents. Still a chance that we kind of suck back up to that 275 line. Again, think about what happens if you're short, you're selling futures to hedge your 275 puts. Now all of a sudden we're rallying back up. You're worried about, losing money on your short futures. You may start buying futures, which may drive the market right back to that 275 line. So that's the reason we look at the open interest. On the other hand, there's also a relatively big line there at the 250 line. The 250 puts could come into play. So if we fail to get any sort of meaningful rally today, it wouldn't surprise me to see us get a sell-off and actually test those 250 lines. So that's my outlook for the next couple days here. As always, remember that these are my thoughts and not those of ADM Investor Services or Chartered Financial Services. Any questions about this, I'm happy to answer them. Shoot me an email, give me a buzz, and I'll talk about it with you. Thanks, and have a great day.